Good afternoon, ladies and gentlemen. I am Nirav, the moderator for this conference call. Welcome to the earnings conference call of Ice Maker Refrigeration Limited, arranged by Aaryana Matasco, to discuss the financial results for the Q4 and FY24 ended 31st March 2024. At this moment, all participant lines are in the listen-only mode. Later, we will conduct a question and answer session. At that time, if you have a question, please press star and 1 on your touchtone keypad. Please note that this conference is being recorded. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. Aaryana. Thank you, and over to you, sir.
Thanks, Nirav. Good evening to all of you. Thank you for joining us today for Ice Maker Refrigeration Limited's earnings conference call to discuss the financial performance for Q4 and the year ended March 31st, 2024. I am thrilled to share that over the past year, Ice Maker's market valuation has gone up by an impressive 88%. Looking back over the past 5 years, this growth has been an outstanding 940%. Our market capitalization in FY 2024 crossed the INR 1,000 crore mark, reflecting Ice Maker's position as one of India's fastest growing companies in its sector. Ice Maker has been consistently rewarding its shareholders, and for FY24, dividend payments have increased to rupees 2 per equity share, which is 20% of face value of rupees 10. As we delve into the financial performance, it is crucial to acknowledge Ice Maker's steady growth in revenues, profitability, and market valuation over the past years. Earnings have grown at 39.4% per year over the past 5 years. Our price-to-earning ratio stands at 38.8x, which is below the industry average of 39.6x. Ice Maker Refrigeration has been growing earnings at an average annual rate of 39.4%. while the industry saw earnings growing at 23.3% annually. Revenues have been growing at an average rate of 25.7% per year, and our current net profit margins, 6.9% of this year, has been higher than last year, so of 6.7%. And our return on equity stands at 25.1%, which is considered high. These achievements reflect our strong market position and effective business strategies. Furthermore, our commitment to sound financial management practices is evident in our prudent use of capital and control on costs. Ice Maker stands as a prominent leader in innovative cooling solutions with a diverse portfolio of over 50 refrigeration products manufactured in India. Our consistent growth performance underscores our unwavering commitment to innovation, excellence, and customer satisfaction. The financial results are available on our website and the stock exchange. However, I would like to caution that during our discussion, we may touch upon forward-looking statements that are subject to known or unknown risks, uncertainties, and other factors. These statements should be viewed in conjunction with our business risks that could affect future results, performance, or achievements. To discuss these results and address endless queries, we have our present management team with us, including Mr. Chandrakant Patel, Chairman and Managing Director, Mr. Nikhil Bhatt, Vice President Strategy, Mr. Ankit Patel, Chief Financial Officer, and Mr. Mandar Desai, Company Secretary and Compliance Officer of Ice Maker Refrigeration Limited. We will discuss the financial performance for the last quarter, and also the full year ended March 31st, 2024. Address your queries and provide insights into our strategic initiatives, market opportunities, and future prospects. With that, I will now pass the floor to Mr. Patel. Sir, over to you. Thank you.
Ladies and gentlemen, good evening. Thank you for joining our earnings call today. We are delighted to present the financial performance and strategic direction of Ice Maker. Despite encountering challenge in the last quarter, including a decline in net profit and falling profit margin. Our company has once again demonstrated resilience and strategic growth, underscoring our unwavering commitment to excellence and financial discipline. We have proactively addressed this challenge and remain confident in our ability to overcome them. IceMac is still fast in its mission to deliver sustainable growth and value to our stakeholders. Our strategic initiative and robust financial discipline will continue to drive our success into the future. The company has achieved remarkable growth, 23% in our top line and 65% in our bottom line for the last quarter, and 21 and 25% respectively for the full fiscal year 2024. This growth driven by strong market demand, efficient cost management strategies, and geographical expansion is testament to our dedication to innovation and excellence in refrigeration industries. The significant increase in revenue and profitability highlight the success of our strategic initiative and our ability to deliver substantial value to our stakeholders. We will continue to focus on expanding our product portfolio and enhancing our market presence as we aim to achieve the rupees 500 crore revenue milestone in the current fiscal year 2025. We are capitalizing on this growth momentum with timely launch of innovative product and capacity expansion, stable raw material price, and increased overall demand for cold room, ammonia, transport, industrial, and commercial refrigeration vertical are expected to significantly contribute to our growth moving forward. With robust demand for cooling and cold chain storage solution, both domestically and internationally, IceMac is well positioning seize this opportunity. We remain optimistic about and concluding the fiscal 2025 year on a strong note. By 2025 is year significance of India, considering several important developments that have either already taken place or going to happen soon, such as formation of new government and strategic direction. The country plan to the next 5 years to become the world's third largest economy by 2027. The cold chain industry in India has witnessed remarkable growth in recent years, driven by increased demand for temperature-sensitive products across various sectors. Major contributors to this demand include the pharmaceutical and healthcare industry, agriculture, horticulture, processed food, and dairy products, which a renewed focus on reducing post-harvest losses, enhancing shelf life, and ensuring product safety. The cold chain has emerged as an indissoluble component of supply chain ecosystem. Despite significant progress, the cold chain sector in India faces many challenges, ranging from indicative infrastructure and technology gap of regulatory complexity, the lack of seamless cold chain network across the country pose logistically hurdles, particularly in rural areas. However, recent government initiative and collaboration between public and private entities are set to address this challenge and create an environmental conducive to sustain growth. Thank you for your attention. I now invite our CFO, Mr. Ankit Patel, to provide insight into the company's financial performance, followed by Mr. Nikhil Bhatt, who will share our business growth strategy. Thank you.
Thank you, sir, and greetings to all of you. Let me first take you through our Q4FY24 financial performance. Sustained growth in demand and strong control over cost has helped in delivering robust performance. During Q4FY24, total income grew by 22.6% on year-on-year basis. Compared to Q3FY24, same was up by 70%. In March 24 quarter, company reported total income of 140 crores compared to 114 crores in corresponding period of fiscal 23. During the quarter, the company's EBITDA margin improved to 14.93%, up by 366 basis points compared to 11.27% in Q4 FY23 and 5.34% in Q3 FY24. During the quarter, raw material cost as a percentage of total income stood, that is COGS, stood at 67.94% as against 71.12% in December 23 quarter and 69.5% in Q4 FY23. Profitability improved, which is led by increase in scale of business. As a result of higher profit, the company delivered 62% year-on-year growth in EBITDA to rupees 20.9 crore. Due to strong demand, net profit jumped by 65.6% on year-on-year basis to 14.30 crore. Let me now move on consolidated financial performance for 12 months FY24. Strong industry growth and pickup in capex cycle and controlled costs helped company to deliver high growth in revenue and profit. During the fiscal 24, the company recorded strong 21% year-on-year growth in total income to rupees 379 crore as against 313 crore revenue in fiscal 23. Better sales mix and higher scale resulted in higher profitability. During the fiscal year ended 24, the company's EBITDA grew by 24.53% on year-on-year basis to rupees 41.39 crore. For the full year ending 24, EBITDA margin stood at 10.9%, recording 31 basis point improvement compared to last fiscal. During the year, the company reported net profit of rupees 26.25 crore, which is up by 26.2% on year-on-year basis. Now I request Mr. Nikhil Bhatt to take over for the business update. Thank you.
Thank you, Ankit ji. Now let me update you some of the business updates during this quarter. We got the continuous order flow in the first quarter so far. We are getting many orders, repeated orders from the reputed clients like Haldiram and Bikanerwala like. We are also getting some good orders from Amul Group Federation unions like Panchamrut Dairy, Banas Dairy, and the order size are substantial, reasonably, which is high. We have also received one of the good orders from the Jammu Kashmir Horticulture Department, and so far as all, we are having 122 crores plus order on hand. In last fiscal years, we have observed the growth in the various areas. Regional wise, we have got the good growth in southern zone, east zone, and as well as in the north zone. In the particular wise, we are having a good flow in the cold room business as well as commercial and the ammonia verticals. So far as our focus is also, we are expanding or we are strengthening our market presence in the North India, and we are looking for some stock point or a warehouse facility so that it can be easy, product availability easy there, and we save the logistic cost to the customers. Let me now update you regarding our current projects of the new product development. Regarding the continuous fog panel, our civil work, construction work is underway, and the imported machinery from the China and Singapore is already delivered at site, and we are expecting the production in the early first or second month of the Q3. Regarding chest freezers, the chest freezer project, the machinery has been ordered, and it will be operating in somewhere in the October 24. So far as Chennai plant is concerned, the civil construction work is underway, and it may take about 6 months to complete that building, and for the shifting by end of this current financial year. The cold chain market has experienced a paradigm shift driven by a burst-going middle class, changing consumer preferences, and an expanding organized retail sector. In terms of revenue, the cold chain market in India was valued at 1.86 trillion rupees in 2022 and is expected to reach about 5.06 trillion by 2028, expanding at a compounded annual growth rate of approximately 18.25% during the fiscal 23 to 28 period. The Indian cold storage market has also seen substantial growth recently, propelled by increasing demand for dairy and frozen foods, as well as the burst-going pharmaceuticals and healthcare industries. India's remarkable contribution to global milk production with a 58% surge over 9 years to reach 230.58 million tons in 22-23, contributing around 25% to global milk production, underscores the imperative need for efficient cold storage facilities in the dairy sector to maintain product quality. Currently, India has over 10,000 fully frozen vehicles and roughly 8,000 cold storage units with a collective capacity exceeding 32 million metric tons, with approximately 70% dedicated to solely to single commodities, predominantly potatoes. According to industry research, the Indian cold storage market is projected to grow at a CAGR of 11.7% during 24 to 30 fiscal years. This growth is attributed to government initiatives such as the PM Kisan Samman Yojana and the increasing necessity of cold storage rooms in the agricultural sector to avoid post-harvest losses, which account for around 28% of the total food products due to lack of proper storage conditions. Moreover, as per the National Center for Cold Chain Development, NCCD, India requires 35 to 40 million metric tons of cold storage, but currently has about 32 million metric tons of storage space, creating significant opportunities for the cold storage expansion in the country. Furthermore, stringent regulations and quality standards such as those mandated by the Food Safety and Standards Authority of India ensure proper storage and handling of perishable goods, further fueling the growth of the Indian cold storage market. IceMake, with its fully integrated business model, innovative products, and strategic sales and marketing.
Participants, please stay connected. The line for the management dropped. Ladies and gentlemen, please stay connected while we rejoin the management back to the call.